My name is Acharia Gracia Mariansang. I'm from class 4C Financial Accounting, and now I would like to explain about financial statement. Financial statements are written records that convey the business activities and the financial performance of a company. Financial statements are often audited by government agencies, accountants, and firms to ensure accuracy and for tax, financing, or investing purposes. Financial statements include the income statement, balance sheet, statement of change in equity, statement of cash flow, and noted to financial statements. The income statement is one of the financial statements of an entity that reports three main financial information of an entity for a specific period of time. Those information included revenues, expenses, and profit or loss for the period of time. The income statement is sometimes called the statement of financial performance because the statement lets the assessors assess and measure the financial performance of an entity from period to period of the similar entity, competitors, or the entity itself. This statement could be presented in two different formats that allowed by IFRS based on an entity's decision. The first format is a single statement format, where both income statements and other comprehensive statements are present in one statement. The second format is the multi-statement, where income statement and other comprehensive income are present in two different formats. In conclusion, if the users want to see how much the entity makes sales, how much the expenses are incurred, and how much is the profit or loss during the period, then the income statement is the statement that the user should be looking for. Balance sheet is sometimes called a statement of financial position. It shows the balance of assets, liabilities, and equity at the end of period of time. The balance sheet is sometimes called the statement of financial position since it shows the values of the entity's net worth. You can find entity net worth by removing liabilities from total assets. Statement of change in equity is one of the financial statements that show the shareholder contribution and movement in equity, and equity balance at the end of the accounting period. Information that shows is these statements include classification of share capital, total share capital, retained earnings, dividend payment, and other related state reserves. Please note that the statement of change of equity is the result of the income statement and balance sheet. The cash flow statement is one of the financial statements that show the movement of the entity's cash during the period. This statement helps users understand how is the cash movement in the entity. There are three sections in this statement. They are cash flow from the operation, cash flow from investing, and cash flow from financing activities. Note to financial statements is the important statement that most people forget about. This is the mandatory requirement by IFRS that the entity has to disclose all information that matters to financial statement and help users better understand. That's the explanation about financial statement.